Welcome back, investors, to Tony's Market Mentor, where we build wealth one step at a time. Let's get right to it. Are you new to investing but don't know where to start? Maybe you're a seasoned pro just struggling to break through a financial barrier. Well, I got you guys covered with today's video that's going to help supercharge your investment portfolio. Before we dive in, remember, this is not financial advice. It's for education and entertainment purposes only. Always consult a licensed professional in your area before investing. In order to have a strong investment portfolio, one that's going to be consistent throughout the years, we need to make sure we have a solid foundation. But how can we accomplish that? Real simple. With these two ETFs, we'll build consistency and growth. But what's an ETF? An ETF is an exchange traded fund. For those that are new, just picture a basket, and inside that basket you're gonna have a whole bunch of different assets. So instead of just buying individual companies like Google and Tesla, we buy the ETF, what's gonna give us exposure to multiple companies and not just one. The first ETF I want you guys to look at is gonna be ticker symbol VOO. This is a Vanguard ETF and it tracks the S&P 500. It gives investors exposure to the top 500 companies in the US stock market. It's an overall great ETF for stability and long-term growth for investors with very low risk. Let's take a look at why VOO is such a good pick for any long-term investor. It's currently trading at $571 and 45 cents. It's up 16% within the last year. You're not gonna get those type of returns in a savings account, and you're definitely not gonna get that with your cash sitting at home. If we dive in deeper into the charts, right here, you see these yellow lines. These are good opportunities to buy in. So I'm willing to buy VOO at 545 or anytime it comes down to 529. Another good indicator to tell you when to buy in is gonna be this red line, the 200 EMA. Anytime the price of VOO comes down to that red line or goes below, that's an indicator for me to buy in. Another good way is to dollar cost average, meaning every Friday you want to invest the same amount, whether it's $10, $5, $25, it doesn't matter. And it doesn't matter what the current price is, as long as you stay consistent. The second ETF I'm looking to purchase is going to be the QQQ. This is going to track the NASDAQ 100 and the top 100 non-financial companies. It's a lot heavier on tech, so it's a little bit more volatile. It's perfect for producing growth. You pair this with the stability that VOO brings, and you're gonna have a solid foundation for a long-term investment. Let's look at the QQQ. It's currently trading at $553 and 88 cents. It's up almost 24% in the last year. The reason for that is because it's heavy on tech, making it slightly more volatile, but it's gonna give us the growth that we want. VOO will give us stability. QQQ will give us growth. Now let's dive into the chart and see where I'm willing to buy this. I'm willing to buy QQQ anytime the price comes down to about 541. I'm also willing to buy it anytime it's around 500 to 502. That's a good resistance. And like the last ETF, anytime it touches the 200 EMA or it goes below, I'm also willing to buy that there. Or I can also dollar cost average like I did on the last one. Every Friday, I want to invest the same amount regardless on what the price is. And if it ever reaches one of my supports or the 200 EMA, then I'm really going to go heavy on these. So we have VOO for stability. We got QQQ for growth. Put those two together and you have a solid foundation for your long-term investing. Now let's dive into our two tech stocks. But before we do me a favor. If you're finding this video useful, hit the like, subscribe, and notification bell. First tech stock I'm looking to buy is going to be Nvidia. Why Nvidia? In a world of AI, Nvidia is leading the charge. It has solid fundamentals, and it's a great long-term hold. Nvidia is currently sitting at $173.72 with a 59% return in the last year. If I am looking to purchase Nvidia, I will either wait for it to come back to the 200 EMA, but another good entry is going to be 143 or around 126, 127, or I could dollar cost average every Friday for the same amount. The second tech stock I'm looking to purchase is TSM, Taiwan Semiconductor. Why TSM? Well, Nvidia needs someone to produce the chips that they use. Guess who that is? That's right, TSM. And I feel like this company is very underrated simply because it's not as exciting as some of these other hype stocks. But let's dive into the chart. It's currently sitting at $235.21, is up 48%. I feel like it's not as volatile as Nvidia. If I was looking to purchase TSM, I would either be looking to buy it at 226, 206, or like the other three, I would wait for it to come down to the 200 EMA, or a dollar cost average every Friday, regardless what the stock price is. Well, there you have it, guys. Whether you're a trader or an investor, if you're looking to grow your long-term wealth, it's important that we have a solid foundation. That way, when the market gets rough, we don't panic sell. A lot of people always underestimate the power of compound interest and are always chasing the next hot stock, the next meme stock, whatever's in hype. But if we're looking to build a generational wealth, we need to be able to hold some of these solid companies, solid ETFs for a generation. If you found this video useful, do me a favor, go ahead and share it with one family member or one friend, anybody that's going to find this helpful or that needs help investing. Until next time, guys, take care.